Welcome. It's Tuesday morning on the floor of the New York Stock Exchange. We are seeing the indexes on new highs, but we're going to talk about the market today with our guest, that is Mark Otto, Managing Director at J.Streicher and Company. Mark, thank you so much for being with us.
Thanks for having me back.
So, Mark, new highs, S&P 500 in this moment, 1757. This market is really going.
It's incredible. I think traders are reluctant, even if they are bearish, they're holding their cards tight. No one really wants to bet against this market. Most people speculate that QE3 has probably been pushed back to March, so that's definitely helped feeding this rally.
Well, after the data that we saw this morning, probably more and more people are believing that the Federal Reserve will not do anything for sure, not at the end of October, in a few days. But as you were saying, nothing until next year. Some people are even speculating it could be June of 2014. Enough, apparently, for the market to celebrate.
Absolutely. The payrolls data today, I think it came out at 148,000 versus 180,000 forecast. The unemployment rate 7.2%, but a lot of people are thinking that a lot of people are just leaving the labor force. So it's not for good reasons.
Yeah, the participation rate, I think, is the lowest since 1978.
Yeah, it's pretty sad. It's actually pretty dismal. But more reports are saying March, but it definitely, it wouldn't shock me if it isn't until June next year.
Yeah. So tell me, what is this market doing? Of course, talking about technical levels at this point is almost impossible. With yesterday, I was talking about 1742, and today we're already in 1757. What are you looking at, Mark?
I'm seeing some reports with analyst projections saying that 1800 is definitely attainable, and if we keep up this pace, it probably will be sooner than later. So, the rally is broad-based. I think there's definitely potential for some shorts to get pushed, and we might see a short squeeze at these levels. That's definitely a possibility. However, right now, there's no real hurdles. We're looking at earnings. For this quarter, I think by the end, we're probably going to see the same movie we've seen in the past. Low hurdles, they're going to jump over. Revenues maybe miss a bit more than that. And forward-looking guidance, Q4 is really the question mark. The next tranche of data for October is going to be pushed back to November 8th from November 1st. So I think the next couple of months, people are going to take a closer look at the macroeconomic data to see what the government shutdown and its impact on Q4 earnings is going to be.
A lot of economists now are calculating like 0.5% point less in a GDP. So it seems that the American economy will keep growing at a 2% rate. Probably another proof that the Federal Reserve is not ready, to intervene again, and this is pushing the market up. Now, talking about earnings season, of course, the projection for the fourth quarter are very important, but so far we haven't seen stellar earnings. We were expecting a lot from technology. We saw Google touching $1,000 the other day, but still financials are disappointing.
Yeah, I think that they are disappointing. It has been techs and financials that have been leading. I think that by the end, when all's said and done, though, a larger percentage will actually jump over the low hurdles. Going for Q4 earnings, definitely the government shutdown is definitely going to temper analyst expectations as well. So we may even see even lower hurdles going into Q4. That coupled with the fact of the delay of the QE3, we definitely could see a happy new year.
Yeah, and 1800 probably will be even nothing. It could even become like a support.
Yeah, we're going to have to bust out the new Dow hats at some point, right?
So now let's talk about some levels, talking about supports in the short term. What are you looking at?
Yeah, very short term, it seems. We're actually sitting on a level practically, so 1758 is a level. From here, 1768 and then 1775. 1750, 1744, 1736 going down for support.
Perfect. We're going to monitor that for sure. Thank you, Mark, for being with us.
All right, thank you.
And thank you for watching.